Lenders 20 questions on pass-throughs and K-1s, video number 4. Should I use actual cash flow or cash flow available to an owner from a pass-through entity? Well, first we'll assume we're talking about a 1040 owner, an individual, although it could be another company. Now, there's 3 numbers, taxable income, but I've told you in other videos why that's a bad idea. How do you decide, though, between actual cash flow from a K-1 and cash flow available by looking at the entire tax return? Well, first of all, most of your financial institutions have some guideline for this, often related to percentage ownership. A real common guideline is if it's 25% or less, we'll go with a K-1. After all, at that low percentage ownership, they probably don't control how much they get to take, and they're less likely to have guaranteed debt. More than 25%, we'll go with the whole return. Even though they need 51% or more to control what they take, even as low as 25%, they might come to the table and try to save the company by putting money in if things are going wrong. And many lenders have had them personally guarantee debt if they're even a 20% owner, so they're more likely to have guaranteed debt. Now, I do make an exception sometimes for the investors who have passive income. There's no liability, there's no call provision. I suppose if you had a 1040 borrower with like 30 different K-1s and they were all in that category, well, your guidelines will tell you if you need a K-1 from every single one of them. Now, even if I have that higher percentage owner, 25% or better, I'm still going to be interested in what they're taking home. So I'll calculate cash flow available, but I'll also look at actual cash flow. If the owners are taking way less home than it seems the company can afford, I'm curious about why that's happening. Is there an expansion getting ready to happen or some other good reason for that? And of course, if the owners keep taking home more than the company can afford, that's a whole different question altogether. 25% is common. I've seen as low as 10% or higher, requiring the full return. So check your guidelines to decide when can I just get the K-1 and when do I need to do the full return if I'm lending to the owner or that owner is a guarantor of another loan I am making. If you enjoyed this information and you would like to receive all 20 free videos of the top questions lenders ask and should ask about business, personal, and global cash flow from pass-through entities, along with a copy of my tax return analysis quick reference guide, visit the URL on your screen.